Something important is happening beneath the surface of global markets, and it isn't getting as much as attention as it should. It's happening quietly, methodically, and with intentions as China stockpile gold. And what's concerning is that this does not feel like as a short-term trade. It feels more as preparation, but preparation for what? When a country like China accumulates gold, it's rarely about optimism because gold doesn't represent confidence in growth or innovation. It mostly represents caution, a desire to hold value outside systems that depend on economic trust, trade cooperation, or political stability. That is why the timing, as well as the quantity of gold China, is stockpiling calls for concern as preparation for instability does not happen when danger is obvious, but rather when uncertainty is growing and before the outcome becomes clear. China has spent decades integrating itself into the global economic system. Its growth over the years has depended largely on global trade, a benefit from being the world's manufacturing hub, capital flows, and relative stability. But the world China is facing now is different from the one that enabled that rise. Right now, trade has become increasingly politicized, weakening global cooperation. Supply chains are fragmenting. Sanctions, tariffs, and financial restrictions are no longer theoretical risks, but active tools of policy. Now, reliance on the dollar is showing to be a huge vulnerability risk. Ask Russia. But gold removes that condition because it doesn't depend on systems, nor does it require another country's permission. It doesn't disappear because of sanctions or policy shifts. So, when China accumulates gold, it can be seen as reducing exposure to outcomes it does not fully control. This may mean distrust, instability, and predictability. Distrust that the rules of the last few decades will continue to apply. Historically, large gold accumulations tend to precede periods of conflict. They show up before alliances weaken, before financial systems harden, and before global trade becomes less cooperative. Gold is a hedge against a world that still functions but no longer feels reliable, and China is not alone in preparing. Other countries are also diversifying their reserves away from the dollar, and these shifts have consequences because when countries prioritize resilience, it often shows up in the economy. Today, gold is priced at over $4,000, and gold prices don't just move because of one buyer. Another precious metal that has been pricing up lately is silver. Silver adds another dimension to this story because, unlike gold, silver is both a monetary and industrial asset. It sits at the intersection of finance, technology, and energy. Demand for silver reflects not just caution, but preparation for physical production in a more fragmented world. Think of it like this: if gold reflects distrust in systems, silver reflects readiness for a future where manufacturing, energy infrastructure, and regional supply chains matter more than global integration. And when a country shows interest in both, it suggests preparation across multiple fronts. For Western households, this can feel distant because gold and silver don't show up in everyday daily life the way grocery prices or rent do. But they do influence those things indirectly because they shape the dollar confidence and rises inflation expectations. When major economies hedge against instability, they quietly admit that the future may be harder to manage, and that admission alone changes the market's behavior. Investors become more selective, credit becomes more cautious, and long term planning becomes harder. The most important thing to understand is that you don't need to be certain to prepare, you just need doubt in the system, and doubt is clearly rising in today's global order. China does not need to know exactly what comes next to prepare for a less predictable world. It only needs to believe that stability is no longer guaranteed, and stockpiling on gold is how that belief expresses itself. For the stock markets, this creates a strange environment because prices can rise and growth can continue, and yet we see these defensive positioning persisting. For the United States and other Western economies, the question is not whether China's gold buying causes immediate disruption. It's what kind of world emerges when large players quietly stop trusting the current world order. Because when trust erodes, cooperation in global trade weakens, and when that happens, households feel the pressure through rising costs of everyday items. By the time gold accumulation becomes an obvious headline, the reasoning behind it would usually already be outdated. The real shift would have already occurred, and the stock markets would have already adapted, and what will remain is your household, struggling to adopt in the new world, because you refuse to plan for you and your family at the end of the old one. China's stockpiling of gold is signaling caution. Caution that trust in the Western dominated world order is eroding, and caution on this scale almost always tend to reshape the environment everyone is used to operating in. The world ahead may still function, but the assumptions underneath them are changing. Global stability is becoming more conditional. Cooperation in trade is becoming selective, and national resilience is becoming more valuable than efficiency, and that is the context in which gold matters. China stockpiling. Gold should be seen as a signal, but signals like this are usually ignored until they no longer can be, and by that time, it may be too late for your household. What are some things your household is doing to prepare for this shift?